Imagine waking up one morning to a world where every single product made in China is no longer available in the United States. From smartphones to clothing, from car parts to prescription medications, all gone. Overnight, a seismic shift in global trade sends shockwaves through markets, businesses, and everyday lives. Today we explore the full impact of a total Chinese export ban on the US economy, global supply chains, and the geopolitical landscape. China is the United States' largest trading partner. In 2024 alone, the US imported over $400 billion worth of goods from China. If those imports were suddenly cut off, the effects would be felt instantly. American consumers rely on Chinese-made goods for everything from electronics to household appliances. The first signs of the crisis would be empty store shelves, skyrocketing prices, and widespread product shortages. Companies like Apple, Dell, and Microsoft source critical components from China. Without these, production slows, leading to higher prices and supply shortages. Imagine trying to buy a new iPhone, only to find that the price has doubled or that it's simply unavailable. Automotive and industrial disruptions? A significant portion of US car manufacturing relies on Chinese parts. Automakers like Ford and GM would struggle to maintain production, leading to layoffs and price increases for new vehicles. The ban would also have a major effect on the retail sector. Walmart, Target, and Amazon, which stock massive amounts of Chinese-made products, would face serious inventory shortages, forcing them to seek alternative suppliers at much higher costs. But this isn't just about the United States. A full export ban would send shockwaves through the global economy. China's role in global manufacturing extends beyond just the US. Companies in Europe, Japan, and South Korea that depend on Chinese parts would also be severely affected. Stock markets would experience an immediate downturn, especially in sectors reliant on Chinese goods. The uncertainty could trigger a global recession. The demand for raw materials like lithium, rare earth metals, and steel, often refined in China, would surge, sending commodity prices soaring. China is a manufacturing powerhouse, but banning exports to the United States would come at a steep cost for Beijing as well. The US is one of China's largest export markets. Losing hundreds of billions of dollars in trade revenue would create massive job losses and economic instability in China. With fewer foreign transactions, China's currency could weaken, leading to financial instability. While China could redirect some exports to other countries, finding alternative buyers for such massive volumes of goods would be a significant challenge. So, is this scenario realistic? While a full export ban is highly unlikely, rising tensions between the US and China suggest that some level of decoupling is already underway. The US has already taken steps to reduce reliance on Chinese supply chains, encouraging domestic manufacturing and investing in chip production through initiatives like the CHIPS Act. Similarly, China is expanding its domestic consumer market and reducing reliance on American technology. If relations between the two countries continue to decline, we could see a fragmented global economy where the US and China operate in largely separate trade blocs. A world where China bans all exports to the United States would be one of economic chaos, political upheaval, and a radical shift in global power structures. While highly unlikely, this scenario serves as a warning of the dangers of economic dependence and the importance of diversified supply chains. Do you think the US could survive without Chinese imports? Could China sustain itself without the American market? Let us know your thoughts in the comments. And don't forget to like, subscribe, and hit the notification bell for more deep dives into global what-if scenarios.